All right. It's the 17th of October 2024. We've got about 30 minutes to the New York Open. So let's do our analysis as usual and get to the charts. Get straight to the charts. Just 1 second. Let me just. Okay. All right. Okay. So this is the daily time frame. Um, Yesterday, previous day closed above weekly resistance. Just a second. I want to make sure that I'm audible. 1 second. Okay. Um, yeah. Yeah, we're good. All right. Okay, so this is the daily chart. Previous daily closed above weekly resistance 2672. I was anticipating a move up yesterday heading towards 2700. It didn't happen yesterday because there was no volume, there was no news events yesterday. But the previous daily, there is a lot of bullish momentum on the high time frame. So the previous daily did close above weekly resistance, right? And we've come and it came right into the supply zone. There's a H4 supply zone right here. It came deep into it, and now today, price has broken above the previous day high and broken above the supply zone, and we are heading towards 2700. Now I have a trade running. I'll explain that when we get to our trading chart. Okay, so this is our trading chart. So before I draw today's zones, I always kind of recap what happened the previous day. So if you watch yesterday's stream, if you watch the last 30 minutes of yesterday's stream or the first 40 minutes or 45 minutes of the stream, either the first 40 minutes or 45 minutes or the last 30 minutes of the stream, you will see that these price levels are marked 2670.72, 2669.85, 2669.14, right? I had said price will come to that area. I had drawn this light green box right here. It was inside this dark green area, which is an H4 demand zone. That's the zone. That's the zone right there. That's a rally, a base, and a rally. Okay, and inside that, we did identify that area, that demand zone was a high liquidity zone, and inside that high liquidity zone, I identified a liquidity candle, what I call a liquidity candle, right? So it was basically this big, massive push up. So, but that was too big. I mean, 100 pip candle. So we had to go down to the lower time frames, and then there was a 15-minute candle, and that candle was too big as well. That was a 56 pip. That was a 59 pip candle. You go down to the 5-minute time frame, and there you got this candle right here, right? This was the candle that you got. Okay, this candle right here, and that candle is a 35 pip candle, perfect candle, right, to take a trade from. So inside that 35 pip candle, I identified on the 1 minute time, on the 5-minute, you see a demand zone right here, a rally, a single basin candle, and a rally. So there was demand right there. There was demand up here as well. There's a rally, a base, and a rally. Let me zoom in just again. Okay, so this was the first demand level inside that candle, rally, base, rally, and again rally, base, rally, right? So there were two demand levels there, and then further down there was a 1 minute demand zone. Let me show you that. This one right here. Okay, this demand zone right here, 2669.14. The one here. So it's basically a drop, two basin candles and a rally. This big candle right here. Okay, and I said that if price does come here, I'm going to be looking to take or I'm going to be looking to take entries with stop loss just below this swing, below this candle, or below somewhere here on the 15-minute or 30-minute, below this candle right here. Okay, that's where the stops were, and price did come deep into it and did rally. Okay, so I did get I'm holding this trade from last night, from yesterday, uh, from the second half of the NY session. So price was up here when I ended the stream. It was somewhere here. I said I was looking for buys only from here. I was not willing to chase price here, right? Because we were in supply. And you can see how price did react finally to supply. It went deep in but did not break it, and it pushed down about 178 pips, and it came exactly to the high liquidity zone that I had marked, and price pushed up. Okay, so this current trade is running at about 180 pips in profit. I have closed partial positions somewhere here. I did close partial positions when we got up here again to the supply zone. Today, during the London session, price came up here and I did close some positions, but I have some running uh, till 2700, right? Or 2699. So that trade, if it does get there, that's a 300 pip move, right? With about a 30 pip stop loss. So the stop loss is about about a 20 pip stop loss, right? So the stop loss is just under that candle. That's about 20 pips. Yeah, that's about just roughly about 20. Yeah, just 20 pip, 21 pips. Okay, so I'm anticipating a 300 pip move on this trade. I've already closed about 85-90% of my position has already been closed in profit, and I'm anticipating a move up here somewhere today because we've got retail sales news today. So before we go to the charts, let's just look at the news for today. Okay, so today we've got retail sales. That's in about 45 minutes from now, about 50 minutes from now, we got news. So until then, I'm not going to be looking to take any trades until this news event, comes up. So we've got about 50 minutes to do our analysis and look for areas of interest where price can come to potentially get entries, to get buy entries. Okay. Because price is bullish, we are at all-time highs. So obviously, there is no selling here because there is no information on the left to sell, right? The chart is completely clean. If you look at the H4 time frame, there are no zones, there are no supply zones here. There is nothing, right? There's all-time highs. Let me just fold this. What happened? Okay. Anyway, fine. I'll sort that out later. Um, there's nothing on the left, right? There's nothing. We're at all-time highs. There's absolutely nothing on the left. Price is at all-time highs. We're heading towards 2,700. That's all the chart tells us. That's all the information we have on the chart. What happened to my trade manager? Okay, perfect. Um, yeah. So there's nothing to the left. So price can turn anywhere between this, right? Within this 140, 150 pip range, price can turn in the middle, can reverse at the middle, anywhere. There is no information to know where it can reverse or where it can bounce or where it can, where price can react, what price can react to, because there is no information on the chart. So the only assumption that I can make is that there is clean space all the way up to 2700. So that's where my final TP is. So hopefully price will head there. If it doesn't come back, I'm not going to manage this trade. If it comes back, it's just a 20 pip stop loss. I will, because I have almost nothing left on this trade. I'll let it go and hit my stop loss. I'm going to leave the TP and the stop loss exactly where it is. Okay. Let's clean up the chart and start with the analysis. So let's get rid of that. There is no. Okay, let me get rid of all of these. Okay. On the daily, price is still pushing up. Okay. Right. Okay, so there is demand right here. There's a drop. There's a base right there. Okay, let's get rid of that. This is also demand rally. 3 basin candles and a rally. Price has come up here, but that's a very big zone and price has come in deep here. Yeah, I'm gonna keep the demand there. Okay, so drop base rally. Let's just look at it on the H1. You have a drop and a base. All of that is a base. Yeah, base and a rally. And this open is 530, and this low is 680. 530, 680. Okay, right. Okay, so that's the closest demand level that I have, right? There's a drop here. There are 2 basin candles and a rally. So leg in, 2 basin candles and a leg out. Okay, that's the demand level. So if you look at it on the H1, yeah, that still makes sense. Okay, because that one taking a level right there is too much. Okay. Um, yeah, 105 pips away. Yeah, okay. So this is the level that I have. Because there is 1, 2, 3, 4, 5, 6, 7, 8, 9 basin candles here, and then the leg out. This is the strong move out. I always like to see 2 same color candles pushing out, right? On the H4, it's also 2 same color candles. So you have a, that's the first candle out of the zone, and then that's the second candle, right? Above that, it didn't break the low, it's above that, and it pushed up. Okay, so on the 1 hour also you see two same color candles pushing out, so that's the demand area. So if price does come into that area, I'm going to be interested in looking for an opportunity. Now we still have this area. This is demand as well. You have a rally, a base, and a rally. That's what we marked yesterday, and price has come deep into it, but there is a bit of that zone left. So this low is 680, 660. Okay, that bit of that zone is left, and then we have further down. Price didn't come to this area, so I'm going to extend that to the okay, and then that is about 240 pips away. Let's extend this as well because there is news today. Because I don't want to be caught. I don't want to be surprised if price does come down here to 2650. I don't want to be caught by surprise. Okay, so I'm going to extend that, and then price is 340 pips away. Yeah, that should be enough. We should head up. Okay, that should be enough. Now these zones are from the previous 2 weeks. I'm going to keep them. I'll delete them maybe at the end of the week because these are very old zones. Don't worry about that. That's not we don't need to worry about that at all. This is what we need to be concerned about. These are the areas. This is the area that we want to be concerned about. If price pulls back, to take buys to go back up. Okay. The where I'm targeting is 2,700 for now, at least on the high time frame. On the daily, I'm targeting 2,700. Okay, that's the more logical move is to get to 2,700. Now, keep in mind that this daily candle has no yeah. So keep in mind that this daily candle has no bottom wick, right? Has no bottom wick. So price could pull back, create a bottom wick, and then head up. That's very possible. Okay. Um, we are very bullish on the daily, on the weekly. You can see, yeah, the previous week closed um, this candle with a strong push up, a huge 450 pip wick, and price is pushing up and has broken this weekly high as well. So we are heading up. The most logical place price can get to is 2700. Okay. All right. There is no supply. There's absolutely no supply to the left. Okay, this would have been supply, but price has already broken through it. Okay, so this could have been supply right here. This zone right here, you have a rally, a base, and a drop, but price has already gone through it. So there is no supply to the left. So even if you do want to look at the H1, there is no supply to the left. Right now, we're going to take a look and see if this is a high liquidity zone or not. So on the H4, we have this swing or this demand zone that eventually took out this, right? So that high, so there was supply right there, and there's a rally and a drop, so there is supply there. So if you go on the 1 hour, you have supply right there, which is this. That would have been your supply zone. Okay, that would have been the supply zone, like a rally, a base, and a drop. Okay, and this H4 move up here took that out. So this is a high liquidity zone. So I'm going to keep that there. Get rid of this. Now, this below, this was a high liquidity zone. It no longer is because prices come deep into it, right? So the zone was a 42 pip zone. Price has come 30 pips into it. So there is probably 1/4 of that zone left. So I'm no longer considering that a high liquidity zone. This is a high liquidity zone. It did take out a zone here on the left. If you want to see how that was identified, you can watch yesterday's stream, right? So I'm going to bring that label to the right. And again, this one as well. Again, if you want to see how this is identified as a high liquidity zone, watch the first 40 minutes of yesterday's stream. These zones will be explained. These two zones and this zone down will be explained very clearly. Okay. And this is obviously demand. You have a rally, a base, and a rally, a rally, a base, and a rally. Okay. So this is all demand. Now, okay. Yeah. Good. Okay. Now, if price comes into this zone, since this is a high liquidity zone, if this comes into the zone, because this zone is a 84 pip zone, roughly about a 84 pip zone, right? So if price comes into that zone is too big for me to take a trade at. So if price does come into this area, where can price reverse? If it pulls back here, where can it go? Is there a liquidity candle here? That's the next thing I look for, right? So that's the process. First, draw H4 supply demand zones, then identify high liquidity zones. Out of those zones, I identify high liquidity zones. Once I identify those high liquidity zones, the third step is find where price can come into. Is there a liquidity candle inside that, right? So let's go down to the lower time frames now. Okay, on the 1 hour, I see this. This is a bullish engulfing candle, right? It's inside this and it's a bullish engulfing candle. And that candle is about a 74 pip candle. So what I'm going to do is I'm going to just mark that candle out, okay? And the reason I quickly spotted this candle is because in this zone, right, out of these 9 candles in here, which are in the zone 1, 2, 3, 4, 5, 6, 7, 8, 9, this candle is the one that stands out the most. Yes, it stands out the most because it's the largest candle in that area. So I call that a liquidity candle. All right, it's grab liquidity to push price up. Right, once price it grab liquidity from lower down here, it just, if you see the candle, if you take it to the candle open, we pushed up about 188 pips from here. Right. So if on the off chance that price does come back down there, is there a trade there? So the high is 427,680. 427,680. Okay. Now that zone 2 is quite big. That's a 74 pip. So let's see if we can narrow it down even further. On the 30-minute, we have a bullish engulfing again. Okay, that's a bullish engulfing candle. And that candle is 70 pips as well. So that's too big as well. Let's look on the 15-minute. On the 15-minute, there are these two candles, right? But this candle ideally. This is the candle. Right? That candle is 42 pips. That's manageable. So I'm going to bring that down to here. The high 151,680. Okay. If you look on the 5 minutes, it's that candle. And now we have a demand zone right here. Perfect demand zone right here. Okay. So I'm going to mark that demand zone here. The open of that 952 to okay, and then there is also because that's a drop, and all of that's a base. If you look on the 15 minute, yeah, look on the 15 minute, there's a level there as well. So this close is 24, open 23, 20, 24. Okay. Hmm. And then there's drop base rally there as well. All right. So close 829. Okay. So in that zone, which is about a 46, 45, 46 pip zone, these are the areas that I'm interested in, and price might just come here as well. Yeah, because that's the candle. That's the start of the candle. We might just tap into that and continue. Um, yeah, this high here, 71.51. Okay. Okay. So if price gets into this high liquidity zone, these are the areas I'm interested in taking buys at. Okay, 2671.5, 2670.25, 2670.25, 2669.5, and 2668.25. Okay, so those are the areas, 4 areas I'm willing to look for buys at. I already have an entry right here. So maybe I might, if price does come, I might not take an entry here. Maybe if it comes somewhere here, I might look for an entry or deeper into this zone. Okay, and the stop loss for that is underneath this zone right here, under this candle right here. Okay, that's the stop loss where the current stop loss is. Okay, so just under this candle, the it's below 2,666.80, right? Just about 2,666.50 or 2,666.60 is the stop loss. And anticipating a move, if we come here, then back up here about a 200, 180, 200 pip move. And if we do break these highs, then we're going to 2,700. That's the move that I'm anticipating, right? Now, I'm anticipating that move because there's nothing on the left. I have no information on the left. So given the information that I have on the chart, I can only anticipate buys, and buys from a high liquidity demand zone, which is here. Right. Um, if price breaks this zone, this high liquidity zone, then it's going to break this little bit, this demand zone right here as well. Okay, there's nothing left in this, and it's going to come down here. So if it comes down here, let's take a look at the next zone and see where price could come to. We have a rally, a base, and a rally. So if it breaks this candle low, If price comes down and breaks this candle low, then we're going to break this low and we're coming here, right? So if it comes here, where can we get a reaction, or where can price turn inside this? So there's a rally, a base and a rally on the H4. Let's look at the H1. Just a second. Okay. Um, Out of that zone is this big candle right here. That's a 79 pip candle or 80 pip candle on the H1. Let's inspect it further on the 30-minute. It's two candles, right? Mainly this candle. That's a 69 pip candle, this candle with a wick. Let's look at it on the 15-minute. It's this big candle here, right? That's a 50 pip candle. That's too big as well. Let's go down to the 5-minute. Okay. On the 5-minute, it's this candle. This is the candle. If you look at this, if you look at all the candles here in this base, all of them, this is the one that stands out the most, this candle here. It's a 28 pip candle, 5-minute, 28 pip 5-minute candle. There is not a single candle larger than that. That's a bull candle, 28 pip candle pushing out of this high liquidity zone, right? So that area right there, stop loss below this, 30 pips, maybe 40 pips. That if price does come, that's the area I'll be willing to look for buys again, right? If you do come down there. And that's about 170 pips away. 170, 175 pips away is this zone, okay? Now we inspect that closer, take a closer look at it on the 1-minute chart. Yeah, so that's the area. Um, yeah, these levels are fine. There is a drop base rally there. There is a drop. These are all basin candles and a rally there. Drop 1, 2, 3, 4. Okay, sorry. Test one. Yeah, that's better. Yeah, yeah. Okay. Yeah, we're back. So there is a drop, 5 basin candles and a rally there. If you look back on the 5-minute, Mm. 60.85. Yeah. 60.85. Yeah, so that's a drop. That's all base, and price failed to come back in. So that would be the ideal area to wait for a trade here. The 20 pip stop loss, 2660.85. So if price comes into this area, this is the area I want to look for a trade at. Up here, maybe not. Maybe not. Yeah, maybe not here. Right? Maybe not here. And there is a zone right there. That's fine. Two double six 3.05. Oh, it's that one there. Okay, get rid of that one. Okay, so those four levels right there. Stops either below this light green area here or here, right? So for entries that are above, stops below this, because I don't want to go more than 40 pip on a stop loss, right? So 35, 36 pip stop loss, that's fine. And for entries below this point here, stop loss there, again about 30 pip stop loss, which is fine. Okay, so either stop loss below this candle here or below these candles here. So what they look like is on the 30-minute, on the 15-minute, yeah, on the 15-minute, for these entries above here, stop loss below this candle, and for entries that are here and below, stop loss below this candle. Okay, roughly about a 30 pip stop loss on the entries, 20 30 pips, 20 pips to 30 pips, right? That's if we come to this dark gray. Now that's the idea. So if we do come, if news drops price down all the way here through this zone all the way here, that's the area. These are the levels that I'm willing to look for buys at. If it doesn't and we get here and see a reaction, then these are the levels that so we've got 4 levels here and 4 levels here, and the TPs are basically back up here again, right? So we've created so on the 15 minutes, so we've got about 15 minutes of news. So on the 15 minutes, just before pre-NY, we've created a new high. We're looking for a pullback, M30 support to be created to go and retest this high, right? That's the trade I'm looking for. That's the trade idea. A trade idea from a high liquid demand zone to retest the high. Pullback, support, retest the pre-NY high. That's a trade idea, okay? Yeah, sorry. Okay. Now let's just take a look at what the session has done so far. I do this every day. It's important to kind of understand what price has done since the day started. So that's the open right there. That's where price opened, um, creating the Asian low. Yeah, so this is the Asian low right here. Sorry. Yeah, so that's the Asian low, 327. And then price went up, created a high here. This is the Asian high right here, 492. Then we came here, went up, created the London low, London high right there, and London low. So the low is 77. And this high is 73. Okay. So here's what price has done. This is the Asian low. Price moved up, straight up, created the Asian high. That's price traded about 116 pips in the Asian session. Was very bullish. Came down to retest this low, push back up. So there is a demand level right there. Retested it, went up, broke the high, created the London high, pulled back once again, retested this area, pushed back, broke the London high. Pre-NY has closed below the London high, and we're heading towards the London low. Right? This is the London low. We're heading towards the London low again. Okay? We're close below, we're heading to it. So we should come to the London low. If we close below, then we're coming deeper to the Asian low. And then if you break below the Asian low, we're coming down to this area, this candle right here, right? So that's what ideally I think is going to happen. Prices close below the London low. Prices close below 15-minute candle in pre-NY. This is high volume time, so these candles are significant. 15-minute candle has closed below the London high. We're coming down to the London low. We should come tap this area, and if we close below here, then we're coming to the Asian low. So that's another 40 pip drop coming to, and if we break below this, we should come down to this candle right here. We should break this candle low and come down to this candle. Okay, yeah, so we are heading towards the London low. Price is getting there now. Got about 13 minutes, 12 minutes to news. And then tomorrow there is no news. On Friday there is nothing. It's a normal trading day. Now, got to keep in mind that the last 3 days we didn't have any news. So Monday was a holiday. Yeah, so Monday was a US holiday. Tuesday, Wednesday we had nothing, no news. So the move, the bullish move came when the 4-hour candle, after the 4-hour candle, after the new 4-hour candle opened, right? That's when the bullish move came. Even yesterday, after the new 4-hour candle opened, yeah, later on, much later on, about 2 hours after that, 2 hours after the 4-hour candle opened, price moved up. Okay, it moved up 175 pips from here, 175 pips. And this also, after the 4-hour candle, we moved up 140 pips. And yeah, so yesterday and day before, it was after the 4-hour candle. So maybe price pushes down and we range for the 4-hour candle, and maybe after the 4-hour candle, after the current 4-hour candle closes, we get a move up, maybe. Right, let's look at the 4-hour time frame. We are pushing down. This candle has an hour 40 minutes to close. We should easily break below these areas. We should come down to this wick, right? This is the wick that price should come down to, right? Because this low is going to get broken. That's about a 55 pip uh, push down. Price should push down about 60 pips from here and break these H4 lows, come further down, and then let's see if we get a move from here push price back up. But these lows are very likely going to get taken out. This low was yesterday, uh, and this was this morning when the market opened. Yeah. So this low is 327 and this low is 284. Low 284, that low right there. And this low 327. Yeah. So price should, if you do close below here, below this London low, then we should take out this low and come further down. Yeah, because this candle has no bottom wick. This candle right here has no bottom wick. Yeah, this candle, we should take out this low here, right here. This low is 2674, so we should push below 2674. So here, in terms of, we had a high taken out here, then a high taken out here. One high, two highs. You got 9 minutes for news. This high taken out here, this high taken out here. Yeah, so price could tap this area. So let's put the numbers there. 846, 506. High 846. Okay, price could tap this area right here, 8166, and push down. Or price could come here, tap 85, 2685, and then push down. Yeah. We could tap here and continue down. So let's see what's going to happen. So I'm not going to do anything to this trade. If price does come down and stops me out on this trade, that's absolutely fine. That's just 20 pips. That's okay. Gonna leave that as it is. But the idea is, if price does come in and we get a reaction here, to load up on the buys to go back up. But we very likely, if we break these low here, once we break this low, price can easily trade into this wick. And once it trades into this wick, we're going to break this low and come to this demand zone right here. Because this is a better demand zone. You have a cleaner move up, a rally base and a rally, a cleaner move up than this. This level has been touched already once. You can see that the demand level, price has already touched it once. The only reason I'm counting on the demand zone is because we are very bullish on the high time frame. The daily time frame is very bullish. So when price is very bullish, it does not need to pull back too much for liquidity, right? Because there are a lot of buying pressure. So it doesn't need to pull down further down for liquidity. But if you do break this low, we'll be trading into this wick, and that's a 58 pip wick, this wick right here. Right? From here onwards, it's a 58 pip wick. Once we trade into this wick, we can break it and come here. So let's see. Price is going to react here and push up, or come further down and come into this area. 4 minutes more. Yeah, okay. I don't know. I might not take any trades today because the trade from yesterday worked fairly decently, gave me decent RR. So I'm not looking to give away these gains. It's made about 3% for the week so far, and we got another trading day, so there's no need to try to push this any further. 3% is very good for the week. But if price does come down here, let's see if you can get a trade here, because 2672 is weekly resistance right there. That's weekly resistance right there, 2672. So if price comes down, then it's creating a bottom wick, and yeah, 54 pip wick, 60 pip wick maybe to go up again. 200 pips maybe come further down. Two 650, this is the other area, right? Oh no, here. 2662. Here. We could drop here as well. Okay. A minute and a half. If price does come here, where is it? This candle right here. $4.59. This low right here. 785. One nine two. Yeah, okay. Let's see what happens. Okay, this is news. Yeah, we are coming down. Broke the low. We are pushing down. So we broke the low, the London low. We should come down further. Yeah, so we did tap into this area, 2681. We're pushing down. If price had come up here, I would have taken a sell somewhere here. But it didn't. It just tapped into 2681.5 and then dropped down. Yeah, exactly. This candle dropped, pushed exactly to 2681.5. That's around an even area, even number, and pushed 63. We should come down here. We should push another 40, 50 pips. Once we break this low, we're coming straight down. Okay, we're coming down. Yeah, so we're breaking this low, as I said. We break this low, we're coming down here. Okay, that was the low. Yeah, so we've broken the low here. That's the Asian low. Now we should break this low here, 284. Yeah, I can't trade such a big candle. I can't trade a 71 pip candle. I can't trade a 71 pip candle. The size 427. Triple 680. 650. Yeah, so we did come to the top of that candle. See, yeah, there is a reaction there. But I want price to come further down here. I can't. That's too much of a zone to take a trade on. This is better. 40 pips, 37 pips is better. But we are reacting to the top of that candle, exactly to the top of that candle, this liquidity candle. Touched it, pushing up. 35 pips, perfect. Yeah. 37 pips and pushing. 40 pip push. 2674.25. Nothing's happening. It's been about, it's just had a drop right now. It's nothing. It's just NY opened here and we dropped about 75, 78 pips. Other than that, there's nothing. We've come and touched the Asian low. I would have liked to see price come further down to get in, but we are trying to push up. Yeah, that's roughly support resistance levels. So price is coming down. We did reject this area. We're pushing down. The 5-minute we reject, we close below, so we should push down to this level right here. Yeah, we should push down. We've got a reaction right here. Yeah, price is pushing up now. Yeah, but I don't want to change the price. This price is reacting to this area 2674.25 and we are pushing back up. Yeah, I don't want to chase price. Yes. Yeah, we're pushing up. Should go up high. We should go to this level right here. I was anticipating a move below this to come here and then push up. But we turned right at the top of that 15-minute candle. Sorry, 30-minute candle. This candle right here. This is the liquidity candle. Price touched it and went up. Um, 7605. 7330. Yeah, it's the one. Yeah, so the 5-minute is reacting. We are pushing up. Once the 5-minute closes above this support, we should continue higher. So there's no opportunity for me to getting on buys because I was looking for a buys further down here. That's the area I'm willing to take buys here, not here. This is too much of a zone. 70 pips is too much for me. This would have been ideal. Somewhere here or here would have been fine. So that's support there. And then here we have Yeah, that area is fine too. Yeah, it's perfect. $73. Yeah, 41. Yeah, we're pushing up right now, so price should push up all the way up here again. Let's see. So I've got my trade open since yesterday. I'm going to hold on to this trade. My final TP is just under 2,700. That's a 300 pip move from here. That's about a 300, just over 300 pip move that I'm anticipating. Let's see if price gets there. I was hoping the price could come down to load up on the buys to go all the way up, but it didn't. So not too bothered by that. I'm going to hold yesterday's entry. I placed a pending order here and here as well, and those two pending orders did get triggered. The stop loss was right under there, just like you can see now. This was the stop loss from yesterday. It was under this candle right here, and or you can even put it under this swing low. You can see a swing. You can see this swing here, the swing right here. So under that candle, but I've brought it a little higher. I think that's where I originally had it, under this swing here, the swing right here. And then I just pushed it up a little bit because price is heading up. Yeah, so we are pushing up right now. We've come here, we've tapped this 30-minute candle high, the liquidity candle, and we are pushing up. Yeah, there's a 15-minute here, level here, and then there's a 15-minute level here as well. Yeah, it was a very nice push up. Price did touch, tap, pushed up 40 odd pips. Yeah, it's open 407. 60. Yeah. Okay. So these are the levels. 5-minute candle closes above these levels. We're going to do the next one. Very simple. I do this every day, right? So we closed below, we came down to this. We closed below, we came down to this, right? This candle closed below this support, came down to this support. This candle closed above this support, we're going here. Once we close above this, we're going here. Once we close above this, we're going back to the top here, right? Because this is high volume time. That is why I look at the 5-minute time frame, right? 5-minute, 15-minute, they're both okay. But when it's high volume time, like the New York Open or the New York Stock Exchange Open, I look at the 5-minute time frame. But it's very important to take time in drawing these levels correctly. Once you draw them correctly, you will see them work perfectly on at least 3 consecutive time frames. You can see on the H1, you can see the number of taps here, right? Tapped, all this tapped. You can see on the H1 how price tapped here, right? Again, you can see how price tapped here, tapped, price tapped. Again here, if you go down to the M30, it's the same thing. You can see the number of taps, price did. Down to the M15, it's the same. If you go to the M5, again, it's the same, right? So if you spend time drawing them correctly, so you can see the 5-minute closed above, so we're heading up here. So for those who are trading support resistance, this is also, this can be, if you are a scalper, this can be a way that you want to trade. If you learn to draw them correctly like this, the way I draw them, then once a 5-minute candle closes above a certain support level, it goes to the next one. Once it closes above that level, it goes to the next one. So you can always put your stop loss underneath there and take the trade up if you're a scalper. But I don't trade these levels. I just draw them to see where price is going to pause or bounce or have a reaction at, right? I trade at high liquidity zones. So price did come to the high liquidity zone, but it came just here. I wanted it to come further down to take a trade. If price does turn back and come down within the next hour, I'll still be interested in taking a trade. Yeah, I'm going to be here for another maybe 30 minutes, maybe 35 minutes, because, and yeah, maybe about 40 minutes or so, maybe 40 minutes. And if in the next 40 minutes of next 30 to 40 minutes, if price does come down here, I'll look to take buys. But if it doesn't, then when it runs all the way up, then so be it. It'll run. That's my final TP there on yesterday's trade at around 2,700. Let's see if price can get there. Okay. Okay, there's 5 minutes for this 15 minutes to candle, 5 minutes for this 15-minute candle to close. I'll be back. So that's a 30-minute trying to close above this support. Maybe it won't, maybe it'll close below. We've tapped 81.626, 81.66 on this fib level here. If we do reject, no, we're not rejecting yet. This is a rejection. This is a rejection. A liquidity wick or an engulfing candle is a rejection. This is not a rejection. This is price coming down to grab liquidity to push up. So the 15-minute candle closed right here inside the support area. You need to see another 5-minute candle or 15-minute candle close above this support for price to continue high. So we might pull back for liquidity and then continue high. 30-minute has closed at that level. The 1 hour has closed inside it. For it to reject, this candle should close like this 1-minute candle. If it closes like this, then that's a rejection. A top wick from that area and a strong bearish move, then we're coming down. If we close like this, yeah, maybe we're coming down now. We have a rejection right there. We possibly coming down here. It's a pretty boring week because we had a holiday this week. I think also this month, at the end of this month, daylight savings will kick in. So yeah, this usually the last week or the week before, the last week of October is a kind of a boring week in terms of trading. Yeah. So next week, what do we have? Nothing. Nothing next week. We don't have anything either. So that's next week news events. Nothing. Just like this week, absolutely nothing. Monday nothing, Tuesday nothing, Wednesday nothing, Thursday unemployment claims, which really doesn't do anything much, and Friday nothing. So these 2 weeks, this week, current week, has been nothing. Next week has been nothing, and then the last week of October, there are news events. Yeah, so there is on Tuesday we have consumer confidence that can move price a bit. Wednesday we have we don't have anything much on Wednesday. Thursday unemployment claims again might move price a bit, and Friday NFP. That's the first NFP. That's a big thing. So it might be quiet a bit, and then we have Thursday, Friday, we might have some volume. So this week and next week, very quiet weeks, nothing happening. Yeah, so price did push down. Once you have a rejection here, so if you are a scalper, once you have a rejection here, stop loss you can put above that, TP at this support level here, and that's an easy 20 pips. Easy 1 hour trade if you are a scalper. Right, we also touched this 2681.66. That's a important level. These fib levels that I draw are very important. You can go back and watch the videos of how I draw them and how this is set up. I'll show you guys now. So basically this fib, since we're doing nothing right now, this fib level is basically drawn. There's a 0 level, a 0.25 level, a 0.5 level, there's a 1, there's a 2, and then there's a 3. Okay, the 0 is the end of the fib, and the 0.25 is a sniper entry. The 0.5 is 1 RR, and level 1 of the fib is the start of the fib. So if you draw them right, then you can, when you draw them, you'll have it like this. You'll draw from the start of the candle, from here, from the candle to the high, because when you're coming down, if you're going up, you draw it the other way around. Okay, and then level 2 is a 7 RR level, and level 3 is a 10.5 RR. Now these RR levels are based on if you get entry here at sniper entry, then and if price comes down here, that's a 3 RR trade, right? So it's also the start, but it's also, if you do get entry up here, it's a 3 RR trade. Now the candle that you draw it on is very important. You can't draw it on any candle, right? The candle that you draw it on, previously price should have taken out two M15 highs. That's why I drew it on this candle. So this candle took out this high, and then this candle took out this high, right? This is all within the pre-NY session, right? So this candle took out this high, then we have two lows, and then this candle took out this high, right? So two previous highs are taken out. So I drew it on this candle. That's a liquidity candle, and you can see price touched the next candle touched here, the start or the 3 RR level, dropped straight down, right? And we came back, we touched here, and we're trying to push down, and we pushed down to 2678.26, right? See how perfectly these fib levels work. And now we're trying to push back up. Once we close above this or close above this support, we're going up to 2685. We're going back up to 2685, right? That's how these fib levels work. It's not your default fibs. It's not your default fib settings. Yeah, so we are pushing up. We need a 5-minute candle close above 2681.66, right? Once a 5-minute candle closes above here, then we're coming straight up 2685. And this candle has no top wick right here, so we are going to take out the high. Once we take out the high, we should break through this, and we should continue higher, right? This candle has no top wick. This candle, very important, this candle has no top wick, right? That's the one that started the move down. This candle has no top wick. So once price comes up here, once it takes out this high, we're going to break this high here, and price is then free to head up, straight up. Okay. But unfortunately, I couldn't take a buy trade. I couldn't load up on my buys because I was anticipating price to come further down here, at least here. This was just too much of a area to take too much of a zone to take a trade from. Yeah. So let's see where the 4-hour candle closes. Maybe if the 4-hour candle closes up here and we do have a pullback, maybe that might be an opportunity. But because there's, apart from this huge liquidity grab, which is from this high liquidity zone here, perfectly touched it, massive liquidity grab on the 30-minute, right? Price has broken the high, so we should come up to 2685 very easily. We should come up here. And once we close above this resistance right here, then we're free to go into this area, trade into this candle right here. Once you break this M5 high, this high here, right here, once you break this M5 high, we're going to break this high. And once we break that high, then it's just clean space after that. And there's absolutely nothing to the left. So price can head up to 2700, or it might decide to turn, kind of pull back within this 100 pip range, but I don't know where because there is no information on the left. Yeah, so the 5-minute candle is close in above this level that I said, 2681.66. It should close above here. Once we close, we should come to 2685.06. And once we close above that, then we're taking out this high. Once we take out that high, we're taking out that high, and then we're heading straight up. Yeah, so we closed above, as I said, we closed above 2681.66, and now price is free to come to 2685.06. These fib levels, if you draw them correctly, they are so precise. They are so precise. Gold is a very technical pair. So if you do learn how to draw supply demand zones correctly, if you do learn how to draw support resistance levels correctly, you will be able to take trades with a lot of confidence. You'll see price touch your zones very accurately. You'll see them price touch your zones very accurately, and that will grow your confidence. And once you grow your confidence, then you'll enjoy the process of trading. Yeah, and this is why I don't have any mobile app on my phone. MT4, MT5, C Trader. I don't have any of those apps on my phone because you can't do all of this. You can't do this kind of detailed analysis on a phone. And the way I trade, I need this detailed analysis to make a decision. I'm not going to just chase price when I see price moving up. I don't do that. So I need to see a lot of information, a detailed analysis of support resistance levels, supply demand levels, at least those two, to be able to make a decision. And that's why I never trade on my phone. Yeah, so price did tap this. We had this line drawn here, 2674.27. Tapped it perfectly. I also said right at the beginning that price will come, touch the Asian low, and that's exactly what we did. That's the Asian low. Look at that. Touched it straight up 100 pips. Touched the Asian low. Closed above the London low, heading towards the London high. This is the London high. That's where we're heading to next. Above 2685. 2685, 2686. That's where we're heading to next. Yeah, so this candle doesn't have a bottom wick yet. So at some point, price is going to grab liquidity below that candle. Maybe today, maybe tomorrow, maybe next week, just below that candle. You can see what happened here. No bottom wick. Eventually price came and tested it, right? Grabbed liquidity below it, pushed up. 300 pips, 350 pips, it pushed up, right? Or 300 pips, let's say here. So when price doesn't have a bottom wick, it gonna see price pull down for liquidity below that candle, below that wick. It doesn't have to happen on the same day. It can happen tomorrow. It can happen a few days after that. But you got to just keep that in mind, that candle has no bottom wick, and that candle is exactly at weekly resistance 2672. Yeah. Yeah, so this 5-minute candle is closing above again. The next one should push up here. We've got clean space to the left. All of that is clean space. There's nothing. So price should easily continue higher. Yeah, here we go. Here we go. Coming straight up. 2685. 2685. Yeah, so we touched resistance right here. We should come to 2685. Either this candle or the next one. I've said this, I think, before as well, um, several times before. I hate when prices are at all-time highs because there's nothing to do. It's just boring. Okay, we've touched 2685. So I said when a 5-minute candle closes above here that we're coming to 2685. And that's exactly where we are. We touched it, 2685 to the pip. Now a candle needs to close above here, above this, to continue to break this high. Once you break this high, we should just break this high and we're gonna continue. My last trade, my final trade is running at about 160 pips. I'm just going to let that run up to 2700 if price gets there. But this was a perfect trade. 110, we should come up here, 140, 150 pips, easy trade. I just didn't like how wide the zone was. If the zone was 40 pips or even 45 pips, I would have taken it. But if I had my entry there, my stop loss is going to be under this light yellow, green area. So that's about 73, 74 pips. That's too much of a zone for me because this was the candle. This is the candle. So if I had my entry there, my stop would have been under this candle. That's a 70 pip zone. I don't take trades with 70 pip stop loss. So I don't do that. The max stop loss for me is about 40 pips. Just over 40 is still okay, but 40 is kind of borderline. Anything below 30 is fantastic. 25, 26 pips, that's fantastic. That's what I look for. This is the candle because price could have easily come deeper into this candle to grab liquidity, right? Because that's the liquidity candle out of this zone, out of this H4 demand zone that I drew. That's the biggest candle. That's the liquidity candle. And that's the candle that I'm looking for price to come into to push back up, right? So from that candle, we pushed up 146 pips. So I'm looking for a similar move, price to come back, grab liquidity from this candle to push back up, right? But it just came to the top one, I don't know, 10 pips, 70, yeah, 1/7 of the candle, just 1/7 of the candle, and then flew 111 pips, 120 pips. Yeah, so we've tapped this 2685. A candle needs to close inside this support to continue higher. If you close below, Then the next candle is going to pull back because this has no liquidity, this has no wick, lower wick. So we're going to pull down for liquidity, grab liquidity from below, and then push up. Yeah, so we did close below. We are rejecting that area for price to push down. Grab liquidity, maybe from 2681.66 again. Grab liquidity here to continue higher. Yeah, there's nothing for me to do here. Let's see, it's really boring. I'm probably gonna end the stream. Um, yeah, in about yeah, I'll end the stream in 9 minutes. That's the yeah. I'm not going to wait here for the next 4-hour candle open. I'm not going to be here because price is just pushing up, and I've got this buy entry from yesterday, perfectly tapped into where I had mentioned price would, right? So price perfectly touched it yesterday. I got an entry, got I think taken 3 entries, one here, and one here. Tapped it. I closed out 2 somewhere here when price came to retest these highs. In the London session, I closed 2 trades. I've still got 1 left, and I'm going to leave a runner. That's a runner to 2700. So these 2 trades I closed out. I had opened them all somewhere. One was here, and one was here, and one was here, I think. So this trade was about 158, 160 pips. Yeah, about 160. I closed it at that high there. So almost 160 pips. Then this trade here was also about 170 pips. So 160 pips on one trade, 170 pips on one trade, and then the last trade is running at about 160 pips as well. Stop loss for all of them was just under this candle, so that would have been average about a 20 pip stop loss on all 3 trades. 20 pips or lower on all 3 trades, and I closed 2 at 170 pips and 160 pips. And I got the last one, holding the last one to this. If you get here, that'll be 300 pips. Yeah, so okay, we closed. We're closing above here. We're coming to this high. Once we take out this high, we should continue. Yeah, so I'm going to be here for another maybe 6-7 minutes. So for those who want to buy, I suggest you wait for the 4-hour candle to close. The 4-hour candle is going to close in about 36 minutes. Once the 4-hour candle closes, depending on where it closes. So the 4-hour candle needs to close above this resistance right here, above these candles. You see these 2 candles? Above these 2 candles. The 4-hour candle needs to close above. As if it closes above these 2 candles, we are heading up. We are heading higher. It needs to close above these 2 candles, right? Then the next candle is going to pull back for liquidity. That's the trade that you want to take going up. Don't rush to buy. Don't chase price. Don't buy soon as the candle closes. Wait for price to pull back. Once price pulls back, uh, wait for the at least a 15-minute time frame for price to pull back and for you to see uh, a bullish 15-minute candle from any of these support levels. Maybe here, maybe down here. That's the trade you want to take to retest this high and continue higher, right? So wait for the 4-hour candle to close. It's going to close in about 35 minutes. Wait for the pullback. It has to close above here, above these highs right here, above 2683, right? The 4-hour candle needs to close above 2683. Yeah, above 2683. The 4-hour candle needs to close above 2683. Once it closes above 2683, wait for the next candle to pull back. Watch the M15 time frame. Price should pull back here, somewhere this area here, or maybe even lower for a liquidity grab, then continue. Those are the buys you want to take. Don't just chase price here. If you try to buy here, chase price here, you could be holding drawdown. Price could come down. You can be holding drawdown for a very long time. So don't do that. Wait for price for the 4-hour candle to close above 2683. Wait for the next 4-hour candle to open, pull back, M15, uh, either a bullish engulfing candle or a rejection candle, a candle like this or a candle like this from this area to push back up. That's a trade. Those are the buy trades. Price could even pull back down here again to go up. Yeah. Pushing down to create that bottom wick to continue higher. Let's look at the 1 minute. Yeah. So that's not a rejection. That's not a rejection. This is a rejection. See that? Bearish engulfing candle and price push down. This is a rejection and price push down. This is not a rejection. This is a rejection to go up. Grab liquidity, pushed up. So is this candle. Grab liquidity, pushed up. You got to be able to read candles. Got to learn to read candles. This was not a rejection. So price just pushed down a little bit, continued higher, right? This is not a rejection. So price is going to come up and take out this high and continue higher. Okay, what's happening on the 5 minutes? Okay, we are pushing up. All right, so there's nothing happening right now. Um, Price is heading higher. The 5 minute candle has closed above this support. Like I said, if it closes above 2685, we're coming up to break this high. Once you break this high, price is going to break this high and continue higher. That's what's going to happen, right? So the 5 minute candle has, as I said, has closed above 2685. Once we close above this, I said price is going to come and take out this high because this candle has no top wick, because this is the candle that started the move down and it has no top wick. So once we take out this high, we're taking out this high, the M15 high, and once we take out that high, there is nothing to the left, so price should continue higher, right? That's what's going to happen. So that might take a while. I'm not going to be here for that long. I've already been here for 2 hours. So I'm going to call it a day. I'm going to leave my trade running. So I've got buys from down there from yesterday that I'm holding up to 2,700, right? And these buys are not random buys. These levels were marked yesterday before the NY session opened. And those are the exact same three levels where I had placed entries on and taken those trades, right? Exactly at those three levels. And all those levels got triggers. For those who are wanting trade ideas, trade signals, whatever you want to call it, this is it. Doesn't get any better than this. Uh, these are the price levels right here. Place your pending orders. Stop loss goes underneath. I even tell you where the stop loss is, and I tell you where price is going to head, because I draw these support, resistance levels, and I tell you if a 5 minute candle closes above one, then it's going to the next one and the next one and the next one, so on and so forth. So, and I do this every day of the week. I do draw these levels every day of the week. So these are all trade ideas, signals, whatever you want to call them. You can take them in conjunction with your trade plan, or just trade it exactly the way I trade it. I place pending orders and stop loss underneath and take those trades. You can do that too. Okay. All right. I'll see you guys tomorrow. Back tomorrow to do the exact same thing, analysis, and then look for zones and levels to take trades from. Okay. This is always the plan. Let me just put up this slide. I haven't done this in a few days. This is the purpose of these streams. Not to show you my gains, not to show you if I can double an account, if I can, double an account very quickly or not. That's not the purpose. It's to teach you how to draw supply and demand zones correctly. It's to teach you how to identify high liquidity zones to trade from. It's to teach you how to draw support resistance levels correctly, right? That's the key word, correctly. Not in any way, but there's a certain way to draw it, and that's very important. And then if you do take a trade and go in drawdown, how to manage risk, right? And if you do those four things correctly, you will have one of these two results: either a win, which will be a low risk, high reward, high probability trade, just like you see this trade that I took from here, right? Low risk, high reward, high probability trade, right? All the way up, 160, 170 pip trade, okay? And probably even higher. And then if you have a loss, that loss is you're going to lose less than your planned loss if you learn how to manage risk. Okay. All right. So that's the end of the stream. I'll be back here tomorrow. See you guys tomorrow.